Okay, so now that we've prepared all these budgets, we've prepared our sales budget, our production budget, direct materials budget, direct labor budget, manufacturing overhead budget, and the selling and administrative budget. The next thing we need to do now is to go and prepare our budgeted income statement. Okay, so with our budgeted income statement, of course, as you guys all know, our starting point will be our sales. What were our sales? And then from our sales, what we'll do is we will subtract our cost of goods sold to get to our gross profit. Okay, so it's going to be our sales minus cost of goods sold to get to our gross profit. And then from there, what we'll do then, the next thing that we're going to do is we're going to subtract our selling and administrative expenses, or our operating expenses. In this case, we only have our selling and administrative expenses. And then if we have any income taxes, which we do, we're going to subtract our income taxes. So that will be income before taxes. So let me just do this right here and say our gross profit minus our selling expenses will give us that. So we'll subtract our taxes, and then once we subtract our taxes, we will have our net income. Okay, so that's what the income statement will look like. So let's go now and populate our income statement. As for our sales, we said our sales were, so we need to go to our sales budget for product A and for product B. So our sales, we determined them to be this much coming from the sales budget for a total of 20 million. Our cost of goods sold. Okay, so this is where things will be a little bit tricky in this case, in this exercise. In many instances and in many questions that you will see on your test or in many textbook examples, they will make it easy for you. It will not be as involved as what I'm showing you right now, how you calculate your cost of goods sold. It will be straightforward. They'll tell you how many products were sold and the cost for each product that was sold. So all you need to do is just go ahead and take the number of products that were sold, multiply it by the cost, the cost per unit. All right. So it will be straightforward in many textbooks, in many instances, or on the test. But in this case, I decided to make it a little bit challenging, just in case you run into a problem that is as challenging. So what we'll need to do is to go back. If you recall, at the beginning of the semester, we did talk about how you prepare a schedule of cost of goods manufactured, leading to you preparing your cost of goods sold. So I know it's been a while since we've looked at all that stuff, but we will need to go and use that information. So we said what we need to do is we will start with the working process. Okay, so we'll go and say what was our working process at the beginning. So in our example here, we don't have any working process, so that's nothing. And then the next part that we're going to work at is our direct material. Okay, so with our direct material, we know we had direct material at the beginning and raw material that we went to purchase, and we also had raw materials that were there at the end. The bottom line is that we want to know how much raw materials were used in production. Okay, so let's go and get that information. So let's start with raw material at the beginning. Okay, raw materials at the beginning, raw materials beginning, we know that so we'll go to our raw materials budget. So I'll come here, go to the raw materials budget. The raw materials at the beginning was 40, and each costing 2, so 80,000. So let me make this so that I'm not scrolling too crazy, and I will hide this. So that I'm not scrolling crazy and making everybody dizzy here. Okay, so those were your raw materials at the beginning, and we need to add our raw material purchases. So we'll go get our raw material purchases, and again we have our raw material purchases in the raw materials budget. These were raw material purchases. And I promise, although this is a lot of work to do, I promise you won't have, in many instances, about 90% of the time you won't have to do all this, but it's always good to know all these intricate details just in case you are faced with a difficult question. Alright, moving along, we will subtract our raw materials at the end. And again, we have our direct materials, raw materials at the end. 882 for A. Okay, so that's that. And then raw materials used is what we're after. And if you don't remember this, just letting you know, this is stuff we did way at the beginning of the semester. So raw materials at the beginning plus raw materials at the end minus plus raw material purchases minus raw materials at the end. Those were the raw materials that were used. So we're done with direct material. Now we move on to direct labor. And with the direct labor, we know that under the direct labor budget, 2 million for 60 and 2 million and 58 for product B. So that's for product A, for product B, and then the total. And then we'll do the next thing, which will be our manufacturing overhead. We did the manufacturing overhead budget. So we're just gonna go and grab that information. Okay, and so if we add our direct material used, our direct labor, and our manufacturing overhead, so our direct material used, our direct labor, and our manufacturing overhead, that will give us our total manufacturing costs, and we will subtract our ending work in process. In this example, we have none. We're not given any of that information. And this will give us our cost of goods manufactured. Okay, our cost of goods manufactured. Once we have our cost of goods manufactured, we will divide that by the units that were produced. So again, production for product A, it was 410, for product B, 245. As you can see, that's why I'm taking those numbers. And this will give us our cost per unit. Okay, our cost per unit. So for cost per unit, it's going to be divided by that. So $11 per unit, and then $20 for that. Let me clear that so that I can finish it up. Alright, so once we have that, then we will figure out our cost of goods sold. Okay, so our cost of goods sold will be straightforward. How many units did we have at the beginning? What was the cost of goods manufactured? And subtract our finished goods at the end, and that will give us our cost of goods sold. Okay, so our finished goods, the beginning, our cost of goods manufactured, and our finished goods at the end. All right, so remember, we're given not the cost of the finished goods, but we were given the number of units. So what we're going to do then is we're going to say, okay, the number of units that were in beginning finished goods were 20,000 units at $11 for product A. For product B, the number of units in beginning were 15,000 times $20 per unit. Our cost of goods manufactured, we calculated that up here. So our cost of goods manufactured, we'll add those. And then we will subtract our finished goods inventory. So our finished goods inventory with 30,000 units, each at 11. And then for product B, 20,000 units, each at 20. So that's our cost of goods sold. So for each product then, sorry, for the total then our cost of goods sold was 9.2. Okay, so like I said earlier, my friends, in many instances you will not have to worry about doing all this work. The information will be given. In many cases you will be given the cost per unit, so you won't have to do all this work to figure out your cost. And once you have your cost per unit, then all you have to do is to multiply it by the number of units that were sold, and then you will get your cost of goods sold. Okay, all right, so let's now go back to our income statement and put our cost of goods sold. So cost of goods sold, alright, so there you go, cost of goods sold, and then you have your gross profit. And then now we go and work on our the rest of our income statement, which is going to be easy peasy. So let's go to our selling and general administration. We prepared that budget earlier, so let's go and grab those numbers. Selling and administration, those were the numbers. Subtract those. Okay, all right, so gross profit minus our operating expenses gives us our net income before taxes. We are given information on the taxes. What did they say? Our taxes are 30% of the income, but income tax is not paid until December. So what is the income tax? That times 30%. That's our income tax. And therefore our net income after paying the master, after paying the government, our net income is 6,482,000. And that is it with the income statement. So again, let me clarify, let me just go over the income statement. The income statement, it's the budgeted income statement. Most of the information will come from all the budgets that you have prepared. So as you can see, our sales information comes from the sales budget. Our cost of goods sold had to come from all the other budgets that are related to production. So the production budget, the direct material, direct labor, and overhead, all that is the information that we used over here to prepare our cost of goods manufactured and to figure out what is the cost per unit, and also to figure out our cost of goods sold. So those budgets were incorporated in all this work, which really were getting us to our cost of goods sold. Again, like I mentioned earlier, in many textbooks, in many questions, it will not be that difficult. You'll be given the cost per unit and the number of units that are sold, obviously, from your sales budget. You multiply that and then you get your cost of goods sold. It will be as straightforward as that. But if you are given a challenging problem, just be aware that this is some of the work that you might be required to do. So as you study, as you review this material, my suggestion is this: get very comfortable with knowing how you calculate your cost of goods sold. Just in case if you had to, you know what you need to do. Okay? And so from there, we get our gross profit, we subtract all our other operating expenses, and then our income taxes to get to our net income. And that's it with the budgeted income statement. All right, so now, my friends, we're going to move on to the next budget, which is the cash budget.